with your FACO position hat, which are the green questions that are going to be the 30 minutes of plenum that everybody can profit from. We have organized a session so that at the end, you can put on your me hat, go in the back of the room, or when the session is over, we've got some experts here and in the back to have some individual consultation, if we stick to the time frame. If you come in the middle of the presentation and interrupt them, that's not going to work. And if you spend our plenum time on individual questions, that's not going to work. So I'm the policeman, and if I interrupt you, I'm not mad at you. I'm just trying to keep our structure so that we get everything done we need to do. I will come after the plenum to finish the plenum and thank them, because some of you will be leaving, and then we can break up for the individual questions. Is that okay with everybody?
Yep.
Okay. So the nice part about being the new person on the Tax and Banking Committee, do I have my hat on? No. Is that I'm new in the job, but I have all the support about subjects that I know something about, but I'm not an expert. So I think we have a really good combination of people here for everybody today, and I'd like to just quickly tell you who they are. In the back for your individual questions, Helena is going to be there for that later. She's not there yet, she's over here. So she'll be sitting there in the back for individual questions, and they will also be available. Nora is the media person for this company, and she'll be doing the moderation today. I'm just sitting here playing policeman. Joni, I'd like to thank for all of her work in finding us and doing a lot of the coordination about how they would be taking part in the sponsorship agreement and all of that kind of thing. But let's talk about maybe our experts. Darlene has 30 years of tax, accounting, financial, and retirement planning experience. She was in two of the big accounting firms before she started her own company in 1986. She does a lot of things, but currently she's lecturing on financial matters to other tax professionals, to banks, to investors, to accountants, and to people like us in the general public. So she's got a lot of experience. And particularly one of her particular concerns is getting the word out about compliance and FATCA issues at the moment. She went to the University of Houston and has a master's degree in tax, and is a member of the Association of International Accountants. Helena, who will be at the back, is an associate director of the firm and has a lot of experience working with cross-border tax compliance for U.S. expatriates. And she's responsible for business development of individual tax clients in their London office. She has 23 years of expatriate tax experience. Andrew has a very checkered career. It just blows you away when you read all of his experience. So he went to SMU and then to the University of Oklahoma. And was started out in Kansas. He has law degrees. He has a lot of tax experience running tax compliance for a lot of big international Fortune 550 companies. But one of his big focuses now is on, let me read this, primarily international income tax and estate planning for U.S. tax clients. So I don't think it would be possible to have more experience in the room than we have today. And I hope they take some of your fear and empower you to get the word out about some of these important issues. And with that, I will turn it over to Nora. Thank you.
Okay, this is something that Margaret's just mentioned, and we've heard this in the last couple of days. And so I just want to talk a moment about dispelling fear. One of the challenges that we have as a firm is we need for people to understand that there are consequences to not being compliant with their US taxes, but on the other side, we don't want to scare anyone. It's not meant to be a scary thing, but it's meant to say you need to gain some knowledge and get the facts. And so we talked about last night what would probably be everyone's biggest fears, and this is the feedback we had. And so the three things fall into the category of criminal implications, the cost of the penalties if you don't get compliant with your US taxes, and the cost of getting compliant with advisors like us or like other people you may use in your local countries. So what we want to do is dispel some of those issues with you today, and you're welcome to talk to any of us, Helen and Joni, myself, Darlene and Andrew, about just these issues. Please be as honest with us as you want to be. What we want to say is don't fear the consequences, get the facts. Each individual is unique. We all have individual and unique circumstances, and this is the first steps to learning. So what we have is a presentation that it's in a room. Some of you are more sophisticated about these issues than others. Maybe your circumstances are. So we're trying to find a balance of detail. We've heard some of the questions you've had the last couple of days. We've had feedback from Margaret. So what we want to do is get a combination of detail, of which we've got a lot more detail, if you need it, and individual questions you can ask Helena later, or some broader things that you may not know. And I think we're all learning, as the rules and laws evolve, we're all learning what that means. And I just want to add that about compliance, in the last 3 or 4 years, our firm has done more voluntary disclosure than almost anybody in Europe, simply because it's been a push by the US government. So our offices in Switzerland and in London have done a lot of cases that would be similar to things and questions you may have, and it is evolving. The IRS agents are learning as we were learning to work with them to do these things. So I'll leave it at that, and I'm going to hand over to Andrew about an American's reporting responsibility.
Before I get started, we're going to broadly focus on 3 areas. We're going to try to cover in a broad spectrum both income tax and estate and gift tax rules. We're going to then look at some of the reporting requirements necessary under the new financial reporting forms, and then we're going to discuss the issues around voluntary disclosure for those that want to come forward and catch up on their tax obligations. Excuse me. The starting point from the U.S. tax system is you have to grasp that U.S. citizens and U.S. tax residents are subject to U.S. tax on their worldwide income. I've had a number of questions from people that say, I live in Belgium or France, whatnot. I have no U.S. sourced income. Do I still have to pay tax? And the answer is yes. You have to look at your global income. The other aspect that I get in the questions are, do I have to report, my husband, let's say, is Belgian, do I have to report his income? And the answer is no. He's not a U.S. citizen, he's not a U.S. resident. We're only focusing on U.S. taxpayers.
Can you talk about
I will, yeah.
Yeah, that's our next slide.
The first grasp is citizen, and obviously, I think most of us realize if you're born in the United States, you are a U.S. citizen. Doesn't matter how your parents got there. If you're born there, you're one of us. If you're born outside of the United States of a U.S. parent, you're not constitutionally a citizen, you're legislatively a citizen. Our laws have changed over the years, and you have to actually look to figure out what the law was at the time you were born to determine whether our legislation picks you up as a citizen or not. And I think modern times it's basically been if your parent has lived in the U.S. for about 5 years, 3 or so after age 14, you're more than likely a U.S. citizen. We get people saying, I haven't registered my child. They're born here, but I haven't registered them with the embassy. I've never gotten them a passport, so they're not a U.S. citizen, right? And the answer is wrong. They're a U.S. citizen, whether you get them a passport or not. Excuse me. Green card holders, those with permanent right to reside in the U.S., they're just like U.S. citizens on income tax at least. They're subject to U.S. tax worldwide, and they're subject to U.S. tax no matter where they live. The biggest problem for the green card holders is that they go into the U.S., they get their green card, they work there for several years, they then, for whatever reason, move back or move out of the U.S. They take their green card, they know it's not going to be very good for immigration purposes after about a year, and they just throw it in a drawer. They may not be able to get into the U.S. with their green card, but they're still tax residents. And you remain a tax resident under the green card until it is formally taken away from you, or you formally give it up, and that's sending it into the State Department of Transportation. They keep changing their departments. There's a form that you fill out, you send it in, they send it back to you. If you go try to get into the U.S. on your green card and the guy at the gate takes it away from you, that's not enough. Because you have a legal right to challenge the customs official. So we end up with a lot of people that they haven't paid U.S. tax in 20 years because they didn't know that they were still subject to tax. It is not great news for them. The other tax resident is not really relevant for this group, but it's anybody that's basically lived in the U.S. For more than 183 days, roughly. It's a bigger test than that. If you're not living in the U.S., it won't pick you up.
There's one thing I'd like to bring up on that point. We come across quite a few individuals who have worked abroad for quite a few years, and then when they retire, they go back to the United States. And they will go and spend maybe 6 months in the United States, 6 months in, let's say, Italy, UK, wherever. The issue is you have to determine where you're resident. Okay, under both jurisdictions, if you start spending 6 months in one location and 6 months in another, you cannot assume that you are automatically just a U.S. taxpayer, especially if you're spending 6 months or close to 6 months on average every year in that foreign location. And you really do have to look at your requirements, because you're going to be subject to U.S. tax no matter where you live. Okay, but the issue becomes, where is your tax residency and whether or not you are subject to tax in the jurisdiction where you're spending on average 6 months a year. So it's something to seriously be aware of.
On the news today, there was a report about the internet. When you buy something on the internet, you have to agree to the terms and conditions. And you click the little accept or don't accept. And they were on about one that's apparently longer than most of Shakespeare's plays. And people just don't read the fine print. This is the fine print in your U.S. passport. And this tells you what we've just been telling you, is that you're a U.S. citizen, you're subject to U.S. tax on a worldwide basis. I've had a couple questions, not U.S. tax, but state tax. Now, there's 50 different states, they all have their own rules. Once you've left the state, more than likely you will cease being a tax resident or subject to tax in that state. But you need to check each state's rules. They're different. I'm from Oklahoma, and we had a rule that if you moved from Oklahoma to another state, you became a non-resident of Oklahoma, unless you moved outside of the United States. And originally, Oklahoma's rule was that if you moved outside of the United States, you remained an Oklahoma resident. Eventually, we got them to change the rule, so now it's a 2-year rule. Effectively, if you're outside of the state for 2 years, you cease being a resident. Some states look at domicile. Most of them look at residents in and out of the state, but do check with your own state officials, because I've talked to several people and they've been living outside of their state for 5 or 6, 7 years, and they're still paying state income tax, and I don't think they owe it.
There's, as expatriates, I would say California and Massachusetts are the 2 toughest states, and so is Vermont, believe it or not. California, and this happens more than once. California State, I had one client whose wife remained in California, and his husband, who was the breadwinner, was actually living in England. California State taxed 50% of his income because his wife and his family home were also in California. So even though he was working abroad his entire, for years, he was subject to California state income tax, okay, on 50% of his income. So it's very, very important, the state laws, and understanding which state you came from. Massachusetts is definitely a domicile state, and if you have left, you have to be out of Massachusetts for 5 years to actually be clear of Massachusetts.
So the important thing is to find out what state you're from.
And New York, for instance, New York, you spend 10 days working in New York, you're subject to New York state income tax on those 10 days worth of earnings. So it's very important, the state laws. Don't ever forget the state issues.
And now we have what does an individual file? And so here's a listing of forms that some of you may know about and others of you may not, and Andrew and Darlene will talk briefly about them. It's just important to know that some of the things you think may not